Pathik Gandotra is partner with Dron Capital. He joins us live from our Mumbai studio. Pathik, good morning. Thank you for joining us.
Good morning.
Pathik, Nifty is up 6% from the recent low. Put things in perspective for us. At a time when fundamental concerns are strong, growth concerns are not over, why have markets appreciated?
I think it was that the capitulation, it was overdone. I mean, the rupee specifically. I mean, by any stretch of imagination, the rupee was extremely undervalued at 68 rupees, 68, 69 rupees actually. And so the rupee had to come back given the fact that the market reposed confidence in the new RBI governor. Now what happened was that given the fact that the rupee capitulated, so did the market. So I think it's just a reversal of the capitulation, and you're just a bit above what levels were, kind of from where the fall started. I don't think one should read too much into either the fall or the rise. I think overall, I think we are in decent shape. I would not say that we are in great shape, but I think we are in decent shape to protect a level of 55 to 5700 very easily. I don't think that level should break. Maybe even 5700 should not break on the downside now. And from here on, I would look to buy stocks rather than sell stocks.
Pathik, hi, morning. So what do you buy? Do you buy the beaten down pockets, the likes of infrastructure, banks, for instance?
So the point is that, my view was when the index was 51, 5200, that time our view was that one should start looking at banks. Now banks have given us some returns. I don't think your correction, the upswing is still over as yet. I think it'll continue for a bit more time till something starts looking pricey. Nothing is looking pricey as of the moment. Even the best quality bank is still not looking pricey. So I think you will have this thing can run up a bit more before you get into any sort of a correction. But eventually, I would look to buy in corrections rather than sell on rises. That would be my focus. Because now it's not as if you have an RBI and a government. You have a smart RBI governor, and you have a government and RBI which are kind of joining forces to fight speculation on the currency. I think which is a very good thing, which is what happens in every developed nation also. So the point is that if that is how you behave as a unit, then speculators will be wary of shorting the rupee indiscriminately. So the rupee will find its own level, but my sense is that from here on it'll be a semblance of more stability than very violent market moves.
I think US bond yields have gone to 3%, but even though US bond yields are at 3%, inflows to emerging markets have started again. Normally US bond yields and emerging market inflows, they work in opposite manner.
They don't always, right, Nikunj? If you see from 04 to 07, US bond yields were rising and inflows into emerging markets were like going on like crazy. The issue only is that whenever there's a knee-jerk reaction in the US bond yields, that's when people get panicky about emerging market inflows, and that's when emerging market sell-off or emerging market bond sell-off. Eventually, it is relative credit quality and relative inflation. So my view is that if the US bond yield steadies here also, emerging market inflows will happen at the current 3% bond yield as well. Just picture one more thing, that we are talking about the whole thing of US Fed tapering. Now the interest rate is already 3% in the US. If interest rates in US climb very rapidly in a very short span of time, it might derail their recovery also. So I guess the market is pricing in the fact that now whatever Fed does will be in an extremely gradual fashion, because they are also worried about the way the bond yields in the US have reacted. Already, if you saw the data that has come out on mortgages, etc., is showing some signs of stress.
Pathik, so what's your sense when it comes to Select Pharma? That pocket has done pretty well, be it a Cipla, Sun Pharma, Dr. Reddy's, or for that matter, a Wockhardt. Is it time to profit book because these stocks have run up so much, or do you think they still have some headroom left?
No, so pharma is extremely stock specific. I think I cannot generalize across the sector. The point is that it is a benefit of it has been a beneficiary of rupee depreciation. That's the only thing which has worked across the sector. But otherwise, it's a different story in every company. Depending upon valuations, I would take picks. If a quality stock like Sun Pharma, one would like to keep in a portfolio from a long-term perspective. It may go through corrections again, but I think from a long-term perspective, I think that's a good stock to own.
I think autos also made a strong comeback. The auto index yesterday hit a fresh high for this calendar year. Why